What is up, you guys? Welcome back to my channel. Nikki here, and in today's video I'm going to be going over why I just bought 10 shares of this stock. So y'all, let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the riff.
Now, y'all already know that I am a long-term, die-hard dividend investor. That portfolio is my baby. But today, you guys, I'm going to kind of show you my Robinhood portfolio for growth stocks. And I started this account a few weeks ago. I had mentioned it before, but I've really only kind of started adding to it like a few days ago, maybe a week and a half ago. And you may be confused because I have been kind of talking shit on some growth stocks and just growth stocks in general. But the purpose of this portfolio is to really only hold these positions no more than like probably a year or 3 years, unless I absolutely fall in love with the company and they start paying a dividend or whatever. To be quite honest with you, most of these companies will probably be sold within a year. Very short-term kind of swing plays, but we will see. If I really like the company, like I said, I will hold a bit longer. And I also will be doing kind of option swing trades in here as well, let alone just the stock and equity itself. So that's kind of the base of what this portfolio is going to be for me. So let's go ahead, let's dive into this Robinhood portfolio. Back on Robinhood, Lord, how I missed you. But let's get it up on the screen. You can see I have $1,322 in there. You can see I'm up about almost 2% for the day. It currently is a Saturday and it's still moving, probably because I'm in a little bit of crypto, which if I need to make a video on that, I will. You can let me know. But that is where I'm at today. A week is about 21.5%. A month is only 1.77%, and I'll explain that in a minute. 3 months, 8.91%. 1 year, same. And then all time, same. Now you can see your girl had some issues right here. I'm not gonna get into too much detail about that, but there was some errors that occurred, let's just say that. But happy to be back up overall, so hopefully we stay that way. So I will quickly show you what I have in this portfolio. Like I said, it's very minimum. I have 3 holdings, that's it. So the first one is going to be Tesla, you guys. Now I do have Tesla in here, okay? All right, if I scroll down here, you can see I have 0.67 shares. So I am doing fractional shares within Tesla. I am total up almost 19% at almost $93. And Tesla is definitely a company that I will probably hold in the very short term while the hype is real and all that stuff, but I most likely will not keep all my money or keep this money in here that long. On the 1 to 3 year mark, I'm definitely into it. I think it's gonna give me some pretty good returns, and I don't mind selling for some profit down the line. And then we all know that Bitcoin has shot to the damn moon and beyond, and I did not buy Bitcoin. I'm not in Bitcoin, but I am in another crypto that I don't know a lot about crypto, to be completely honest with you all, but I did jump into this one because I felt like the FOMO of Bitcoin is real for a lot of people and they may be dumping money into this one. So I'm gonna ride it as long as I can, and we'll see how it goes. But that one is going to be Ethereum. I think it's called Ethereum. You can let me know if I'm wrong, but I think that's what it is. But if I come down here, you can see I'm up almost 25% for my initial investment. I own 0.4 of a share, so definitely not a full share. You can see my average cost, but this thing has just been kind of wild, to be honest with you. Like I said, this is not a long-term investment for me by any means, but I'm here for that ride up, and I will cash out when I feel I've made enough from it. But there is a stock that I actually bought 10 full shares of because I want to invest in them. I think it's a great company. It does not pay a dividend, therefore that's why it's in my growth portfolio, and I highly recommend looking into this one, you guys. And that one is going to be Tattooed Chef. Currently about $23.65. You can come down here. I have 10 shares at an average cost of $23.77, so I am down a little bit, but not upset. I'll get into why I really like them in a minute. Yeah, I mean, obviously they don't pay a dividend, nothing like that, but you can see in the last year here, they're up about 130%. Last 5 years, they're up about 100, almost 50%, but you can also see that they are fairly new to the market, so there is that. Damn, if you got them back here, that would have been nice. But over the course of at least 3 to 5 more years, I do think I will get a lot more return on them. I have to be honest with you guys, I have a hard time with growth stocks and like growth companies because I'm just so in love with the long-term, like 20, 30 years of just growth, compound dividends. I mean, it really doesn't get better than that to me, but in the short term, get some gains to have my money, make a little bit money, maybe more quickly. I do like the growth, and like I've said a million thousand times, that's why I have an entirely very separate portfolio for that, because this is going to be money that I'm putting in that if I went to zero, I would be 100% okay with. If I went to zero in my long term, that would be a little bit heartbreaking, but you know, hopefully that never happens. Now, the Tattooed Chef, I'm excited about. I'm really happy to be opening a position in this because I personally believe that this company could easily double in the next 3 to 5 years, and that's kind of the trajectory that I have on my mind for holding this company. Unless they just absolutely tear it, they end up paying a dividend or something like that, I definitely hold it longer. But I just see really good potential returns in this one, and let's like talk about that a little bit. Because remember, it's extremely important that you understand when you're investing in a stock, you're investing in a company, you're investing in a business, and you need to believe in that business, understand that business, and see the potential for that business. So the first reason why I really just love this company is the fact that it is an organic, it's not vegan, but it is plant-based, but not necessarily vegan. I get a little bit confused because your girl likes a ribeye steak, and that's all I know. But your girl also does know that success leaves clues, and the plant-based burger by Beyond Meat has been a game changer for a lot of people. And especially, kind of unfortunately, living in California, I see these plant-based, vegan, organic, vegetarian, tree-hugging kind of people all the time. I understand the market that this kind of business has.
It's not naughty to love your body.
And on a side note, I personally have had their buffalo cauliflower patty burger thing. Pretty good, not gonna lie. So I know personally that the food actually tastes good, and it just continues to crush its numbers, which I'm gonna talk about here in a second. I just really believe in them. They have a solid customer base already, and I just expect that to just blow up in the next few years, because you already know how I feel about brand recognition, brand loyalty. I've talked about it 100,000 million times. To build brand loyalty, brand engagement, and brand trust is the most crucial thing a business can do. And the fact that they're a profitable company, which seems kind of like duh, but there are companies out there that people pour money into that are not profitable, and that's just not really my thing. I did it early on, and I have a holding that's not in my long term, but that's because I was stupid. I was young, dumb, broke, stupid, dumb, and I had no idea what I was doing, but I just keep the shares in there because hey, if they go up, they go up. If not, I lose like $100. So it is what it is. But it's extremely important for me now going forward, learning more about this whole thing. I don't want to put money into something that's not profitable. So the second thing really kind of piggybacks off the first thing, but also a little bit into their numbers. So in 2018, they had 47 million in revenue, and by the end of 2020, they had $60.7 million revenue. And get this, analysts project them to go north of $220 million. I can't even think about how much money that is. And another great thing I just love about them is they got cash money on that balance sheet. They got over $90 million, and that's key for this company too, because early on they did not spend a ton of money on marketing, ads, nothing, like really low key. So I love the fact that they have that on there, not only to kind of manage their debts or whatever they have going on, but also it gives them a good amount of money to finally put back into the business, to expand it, to advertise it, to market it, to open new places. Like they're pretty solid. Also, what I really love about them is that they are already in places like Target, Walmart, and Costco. And you don't get into market giants like that if you're not doing well, or at least you're not gonna stay in them very long. And granted, they're not in every single one around the country, but they're in them and they're doing very well. So I would only imagine they get into more, and not only do they get into more, but then they can put more products into those businesses, into those markets. Because let's say, for example, they open in a Walmart. Walmart's like, yeah, we'll give you shelf space for 3 products. So they give them their 3 best products. Walmart starts to notice they're selling those products very well. Maybe the following year they go, okay, we'll give you shelf space for 5 products. And then they get to put more and more products, and it just kind of grows from there. And they are taking those steps that through 2021 and even beyond, I feel like they're going to really benefit off of that. And the third reason really is something that I don't really talk about a ton. I talk about how if you're investing, you need to be investing into the business that you like, you understand, yada 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 yada. But you get my point. But I never really emphasize how important, at least I think it is, that you research the management team, the executives, the CEO, the COO, the CMO, the CFO. I mean, I don't know, they got a bunch of O's. Because you can invest into the business, but who's running the business? Like, they could run it straight into the damn ground. You're basically paying these people, you know what I mean? So I think, I don't talk about it enough, but it is very crucial that you do that. So this company has a few people, you know, that are executives here, but there's two. Does that make it four? I don't know. There's two that are very important, in my opinion, the most important, and the ones that are really driving this car. So the first one is Sam Galletti and then Sarah Galletti. And yes, it's a father-daughter duo just doing the damn thing. And Sam, the dad, is the CEO, and he's had over 35 years of experience in the food industry, but more specifically within operations, investor relations, and even more specifically, it was food industries that dealt with organic, seafood, veggie, just health-based cuisine. Look at me, cuisine. That's just important that he has that experience to do that. And also the fact that he is running the business of his daughter, Sarah, who really is the founder of this, the mastermind behind the meals, the branding, the logo. She's the founder, she's the brains, okay? And I don't know their relationship, but I would think if your dad effed up your baby, and not like actual baby, that's weird. If your dad messed up your dream and your passion and your business, that would cause a lot of shit. That would cause a lot of problems. And so I think having a father-daughter dynamic makes them want to work even harder to make sure this runs smoothly, because if you have Joe Schmo running your stuff, they don't really, on a personal level, they don't really care. I mean, they might, I don't know, they're making hella money, so they might, but personally, it wouldn't affect their life. You know what I mean? You know what I'm saying? Maybe you don't, but I just, maybe it's because I'm a female, I'm tapping. I'm tapping into the emotions, but I think it's just important. So being a family-run business, even though it's like not really a family-run, but there's a lot of other people involved, but I think that's pretty crucial. I think the fact that the numbers are what they are, the amount of revenue they produce, the projected numbers, and yes, this is all projected, so we don't know for sure, and obviously don't ever just listen to me because I'm dumb as hell, but you know, a lot of analysts do favor this, so take that what you will. And just the fact that they make a good ass product with a lot of people who already enjoy it, and I just see that that is going to continue to grow. So do you own Tattooed Chef? Do you like it? Have you heard of it? What are your thoughts about it? You know I love hearing what you guys think about what I say. Well, sometimes some of y'all are. Just kidding, you guys are great. Comment down below, let me know. Also, if you don't mind, could you please hit the thumbs up button for the algorithm for you, girl? We try to do big things in 2021. And if you are not subscribed, please consider subscribing by hitting the NB in the bottom corner or that red subscribe button. I post 2 videos a week on this channel about money, stocks, investing, finance, side hustles, just making money and having a good ass time. So if you're into that, or if you just liked hanging out with me, please consider hitting the damn button. And like always, guys, if you made it this far to the video, you are the real MVP. Come here, you know I love you. And like always, you guys, enjoy the journey, whatever your journey is. Always remember to do what sets your hearts on fire, and I will see y'all, I know I will, in my next video. Bye, guys.